All right, 20 dwarves, 20 dwarves. In sooth, I know not why I am so sad. The rain in Spain falls mainly on the plains. Welcome to Paramount's Great America. All right, good. Good morning, everybody. It is a Thursday, which means we are going to meet as a swing trading group. Well, I know it's Christmas Eve, yo, but we have work to do. We have to plan next week. We have to plan next month. So if you're part of that, make sure you're around 2 p.m. Eastern Time. Today, we're going to, I guess, cover technical and fundamental analysis. It's a half day. The U.S. Stock market closes at 1 p.m. Futures and options at 2, I think. We might have a Brexit deal. Our stimulus package is gone. Should be very interesting. So, without further ado, welcome to Forex.Today. Let's go! So welcome to Forex.Today, the YouTube and the Facebook and the Twitch community of over 17,000 foreign exchange traders stationed around the world. We meet today and every weekday at 8 a.m. Eastern Time, which is approximately London lunch, and a couple hours before the U.S. stock market opens, so that we can align our satellites and synchronize our watches as a community, as a team of patient, disciplined currency traders. However, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. G'day, mate! Hey, my name is Wayne McDonald. I'm a currency trader. Been doing it for 20 years. Super happy about currency trading. Still love it. Forex is pretty amazing. A, you get asset appreciation, and B, you get income streams. C, you get huge leverage. B, you get great tax rates. If you're in the UK and you do spread betting, you don't even pay taxes at all. How cool is that? Right on. And so anyways, I like what I do. I'm still here. It's a rainy day on Christmas Eve here in Atlanta. Hotlanta. So let's at least make it a happy day. Let's go through the charts. Let's talk technicals and fundamentals. Let's talk with the news of the day. You can ask me questions. I like it when you get involved. You can ask specific currency pairs. Euro, dollar, pound, yen, Swissy, Bitcoin, gold, oil. Those are the typical ones I try to hit. Every once in a while, someone shows up and says, "Oh, what about the pound kiwi?" Okay, yeah, maybe we'll do that too. Whatever. We can do your crosses if that's what you want. Hey, I don't know. I don't need to get in your business. So yeah, maybe we do that too. Cool. So I'm a macro trend trader. I tend to focus on that kind of stuff. Please like, please subscribe, and please comment on the recordings. And the reason for that is you're simply telling YouTube this is quality content. The other thing is if you leave comments under the recordings, and instead of just saying, hey, yo, you can say, in this video, I learned such and such a thing, maybe timestamp it and everything, so that you have a repository of knowledge that you can access in your YouTube back office, right? So you go into your YouTube account and you can search all your comments. And of course, now you can say, hey, he talked about, what did we talk about recently? We talked about some pretty interesting things. Anyways, you say, hey, this was a pretty interesting thing, and you type that in, and now you can find that a year from now, 5 years from now, 10 years from now. Okay? So that would be a good thing that you can do. So it would benefit yourself more than me. It doesn't really benefit me personally. But it does tell YouTube this is quality content. Maybe we can, save a few Forex souls along the way. Guten Tag! Morning, everybody. Good to see everybody. You're working today, huh? I'd like to thank Traders Way for being good people. They did send out a message yesterday about the trading hours. I know the U.S. market closes at 1, so maybe they pull the plug then. I don't think the market's open tomorrow, but I believe it opens Boxing Day. You'll have to Google that. December 26th. All right, all the Americans are like, what the heck's Boxing Day? Is that Tyson's back, right? So anyways, what do you want me to cover first? You're the boss. Oh, I'd like to thank everyone that signed up for the annual membership to the live trading group that I do. Like I said, in January, early January, first of all, the first trading day of January, I plan on being on my chart. So if you're part of that group, look for an email. So we'll get together like day 1. So I know it's not really a swing trade, but we need to get our trades on, things like day trades into weekly trades into position trades in case there's another flash crash. I remember, I think it was 2 years ago, we had a flash crash where the yens, for example, dropped about 400 pips in a matter of 15 or 20 minutes, which we predicted in advance, but not the flash part. But imagine one of these. Ciao. Okay. So anyways, so we can do that. So, right, join the group if you want that first day of the year flash crash setup. And then I'm going to start doing the macroeconomics class, which will eventually be on the FX Bootcamp training courses. So many things to do, plus our jobs, right? Miranda said, yeah, many people are, well, and not boot campers though, right? Not Forex.Todayers. But people were like, holy crap, it happened in 20 minutes. I'm like, well, dude, I don't know how fast it's going to fall. I only prepared you for a month that it was going to fall. But what can I say? So I would do this, right, Marina? I would say, what happened last time? And how would you like to prepare just in case it happens again this time? Okay. Well, and I guess we could talk about the velocity of it. Imagine there's not many people in front of their charts in the first hours of the trading year. Okay. So let's imagine that. And you know what? Let's use this chart as our whipping boy. All right. Let's do it like this. Okay, cool. And so let's draw this up. Let's see if let me get creative here. So we're kind of at this place, okay? So let's say that's December 31st. December 31st, that is my date of birth. I got to the party and I did the Smurf. I get it. I got it. I know it's good. My rhymes are tight. You wish you could. I know I changed that a little bit, but that's what I do. All right. Okay, so there we are. December 31st. Where do you put your stops? Well, some people put stops here, and some people put stops, let's say here, and then there's this, and maybe they have that, and then there's stops here, and then there's stops. These are all stops. Stop, 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 okay? And everyone is planned for this, or let's say hoping. Remember, we plan for down, and everyone's hoping up. The reason I know it's hoping, because they decided not to take profit. You see? Well, Fred, you can, front running is fine too. Okay? You do whatever you want. I'm just explaining how to set it up. But you can do it. You can do anything you want. And ultimately, that's your alpha. Okay? So I'm just saying, hey, keep your eyes wide open for this. And if it happens, have a plan for it. React appropriately. So this is what people are hoping for. And this is why you get flash crashes. So that everyone puts their stops. Oops, that was supposed to be black. Okay. And then what happens is down, 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 stopped out. What does the broker do? Well, these are long positions, so the broker sells to offset the long. Okay? And then someone else gets in, stop, right? So sell, and it drops to here, sell, and then it drops to here because now it's flash crashing, right? And what's happening is no one's actually selling, or very few people are actually selling. It's just that you got all these stops in here and it's cascading. So think about it as one last snowflake falls from the sky and lands on top of the mountain, triggering 2 snowflakes, then 3, then 10, then 100, and then 1,000,000, and then 1,000,000,000, and all of a sudden you have an avalanche. No one's selling, the whole thing's collapsing on itself. You see? You see? No one is actually selling. It's just everybody's getting knocked out. Out, 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 and just whoa. The faster it goes, the more momentum it's picking up. And then what happens? Someone else in this period said, well, if it comes down here, I'd like to buy it. Buy. 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 Okay? What happens is then, remember, no one's actually short, so they're kind of like empty trades. Then suddenly hitting a period where buyers are actually getting in. Okay, and of course, it's the people that got out here that are getting back in. Why? They're smart, and everyone else is lazy, slow as a sloth. Okay? And then, so the sloth loses all his money and then tries cryptocurrency trading instead. So one way you might want to deal with it, right, Marina, is say, I have to have this planned out and prepared for this to collapse. And if so, you're going to put orders down here, or you're going to trade down here. And then lastly, you say, well, I understand these are all empty trades. Nobody's selling. It's just the market is collapsing. And you say, well, I've been through this before, and the collapse is vicious because there's nothing underneath it. There's no buyers. All the buyers were here. So you're like, well, I've been through this before. This was 1900, and the next day it's 1850. So you put that in your mind and you say, well, I guess I can start looking to buy gold early in January if it drops $100 quickly. And that would suck me into the market, for example. If you were a long-term bull, what would you do if it dropped $100 in 10 minutes? Would you buy it? This is the same message I gave to you back in April, late March, I believe it was, where I said, okay, this is the time. Find 3 stocks that you've always wanted to buy, but were way overpriced. Get ready. You need to buy now. You need to buy low. You need to buy when there's blood in the street. You guys remember that? You cannot save your way into prosperity. Remember, your great-grandpa who went through the Great Depression, he taught your grandpa, and your grandpa taught your dad, and your dad taught you that you need to save every penny. Save it. Save it. Well, right now, you're losing 1% guaranteed every year if you save. Okay? That's assuming you save by buying the 10-year T-note, which you know most people don't do. But let's say you buy the 10-year T-note. That's a 10YN note, okay? And it's paying you less than 1%, but right now inflation's at 2% or expected to be at 2%. So in real terms, you are losing to 1% guaranteed. So keep saving, and you'll, at the end of your life, you'll still be poor. So how do you make money if it's not saving your way into prosperity? Yeah, well, it's been 0.94, Jim, for like, I don't know, three months now, right? When I pulled money out of the market, and by the way, the deal's done. The deal's done. I started in late March. I think the same time I told you, you can't save your way into prosperity. The paperwork's all signed. The money's being transferred. But I pulled the money out of the market at 0.4 something. 0.4 something. Amazing that it took this long. It's just amazing. But anyway, so I want to make the point, you can't save your way into prosperity. You need to own. Okay? In America, there are two taxation systems. One for poor people. And what's the other taxation system in America? Who wants to take a stab at that one? There's a tax system for poor people. The other one is businesses. Yeah. Okay. So that means you own. Businesses don't spend money, they invest. So you own a business, which is a cash flow, right? Think of it. If you don't have a cash flow, you're not a business. Okay. So you own a business, you own a cash flow, you get expenses written off, but you also buy capital. You own inventory, you own a building, you own the income stream. Okay? Or you simply own stocks. You're like, wait, that's not a business. Well, it is a business. You own, now it might be your personal account, but you own shares in a corporation. You are an owner of a corporation which has cash flows. And that appreciates. Because you buy good companies, the value of those companies appreciate over time because of their continued cash flows. And then on top of that, if they make a ton of money, they might distribute dividends. Now you get ownership where you benefit from capital appreciation, but now you also have an income stream. So you have wealth and income, but you don't do anything. You just own. Or you might have an LLC, or you might have a trust, or all these things are ownerships. Okay? So, what's your plan here? Do you plan on owning gold? And what would you do if it dropped $100 on the first day of trading? What would you do? Ask yourself. What would you do? And that's boss mode. That's extreme boss mode. Other people come back to, right, 3 days later, and I do a webinar here at Forex.Today, and they're like, Wayne, you didn't tell me it was going to fall in 10 minutes. I'm like, dude, I told you for 16 weeks in a row that the potential for it to drop is extremely high. How fast it drops, not my problem. What you do, not my problem. You knew, so it's your responsibility, right? That's why, as a professional, you always have to be RWA. Straight out of Pippin. All right. By the way, good morning. Happy Christmas Eve. My coffee mug says, Santa's coming in. Somebody, what? Days until Santa comes. But I don't have a marker anymore, and my coffee mug's all dirty and worn out. But hey, Santa's coming tonight. And it is raining. I can't even go out, sit in the sunshine, and smoke a cigar, and ponder the complexities of our universe. Sucks. But I'm pretty sure it's game night at the McDonald household. which means it's probably going to end up a ruthless, to the death battle between my son and I over Monopoly. Hey, Daniel! Daniel's son. Hey, Daniel. First of all, Happy New Year. Happy holidays. I hope the family's doing well. I can't remember what I said, but I think I just talked about you yesterday in the webinar. How strong our friendship is and how many great times we've had. Oh, I know what it was, Daniel. Uh-oh. I might get in trouble. I used you as an example of you getting to Canada as a young man and getting your engineering degree and facing what I call blatant racism from Canada. I don't know, what was this, in the 1980s, where like you're an engineer and you're like, you don't get like a hardcore engineering job. You get any job you can get, and then you immediately out hustle everybody, right? And I was saying like other engineers at the company would get opportunities and they're like, oh, I don't want to go out there. It's like 200 kilometers away, and you jump in the car and boom, off you go. And you work day and night, weekends, it didn't matter. Any job was a good job, and pretty soon you have everyone else's job, and you're driving your BMW across Canada, and you're like, Canada, I love this country, right? But the idea was that I like people that are hardcore disciplined and focused. And you're one of those people. And I said, you have amazing stories in your life, and it all comes from you being smart. But smart's good, right? Smart's good, but it's the hustle that matters. And Daniel, you got hustle. And I haven't told all the good stories. Some of those are tucked in safe in a vault. But I was talking about the willing to do whatever it takes to succeed, and doing that through focus and hard work. That's you. Yeah, 7 feet tall, man. 7 feet tall. So anyways, which is another way of saying, I want to go to Hong Kong and I want to go to Singapore. I want to hang out with Daniel. So anyways, miss you, buddy. All right. Let me tell one other funny, great memory I have of Daniel and I. So we're in, where is it, Shenzhen? Yeah, we're in Shenzhen at the China Forex Trading Expo. And I had spoken earlier in the day and stuff. And Daniel's on stage with me, and that's all cool. And so we go through that. That's great. And at the end of the day, there's supposed to be this big panel on what was it, like binary option trading or something. I'm like, well, I'm with Traders Way, and at that time we didn't have binary options. So I'm like, that's not really what we do. But hey, man, I know a few things. I'll sit on your panel for you. So they're like, oh, thank you very much. Okay. So anyways, it's great. But it's the last panel of the show. Cool. So anyway, so Daniel and I, we're hanging out and stuff. We're like, oh, we got to go do this panel. So I show up to the panel, and they're freaking out, like the show people, right? The China Expo people. They're like, nobody's here except you. I'm like, what? They're like, everyone's quit. Like, this broker was supposed to be here. They've walked away. They're already out. The show's done. They're out partying or something. And the other group's gone. And it might just be you and some other person. And all of a sudden, it's like to the minute. They're like, it's supposed to start. Nobody's here. Nobody except you. And of course, I don't even have binary options, right? I'm a Forex guy, right? Just a pure, right? And none of the binary option brokers showed up. And they're freaking out. They're like, there's a few hundred people in the audience right in front of us. And I'm backstage with Daniel. And I'm with the producer. And I say to him, look, there's a saying on Broadway that the show always, right? The show must go on, no matter what, right? I said, look, I'll tell you what. Daniel and I will take care of this. Don't worry. It'll work out. Daniel and I will take care of this. So I'll go out on stage, and it's like, I don't know, what was it, Daniel, an hour and a half or something? I'm like, I'll go out on stage, and Daniel will be out. I think, Daniel, you were in the audience with the microphone, or maybe they passed a microphone, and then you would get Right, they would ask in Chinese the question, and then Daniel would translate it to me, and then I would answer the question, and Daniel would, because he knows his stuff, right? I mean, he's been in Forex for, 28 years. So anyway, so he knows me. He knows the answer before I even give it. He just polite lets me answer. And then he says it back into Chinese, back to the audience, and we're just like, ask us anything for an hour and a half. To a huge audience of hundreds of people, and it didn't even benefit us. We're just there saving the show. And then we're done. We're like, nice. And so I'll always remember that. You'll always be in my heart, Daniel. And those are some great stories where like, hey, we'll just get on stage. 200-300 people can ask us anything they want about anything, and we got answers for that because that's how we roll. So like extreme boss mode. But isn't that cool? We saved the show. And for that show, we won. Traders Way got an award being Best Forex Educator. But that's how we roll. Like Daniel and I, we just get up on stage like, we got this. Don't worry about it. Isn't that funny? What a great day. Okay. So let's bust this down. I think I made my point. You need to get ready for the flash crash. If there's going to be a flash crash, is there going to be a flash crash? How the heck would I know? The thing is, are you planning it out? Are you preparing? Are you thinking about it? What would you do? Are you going to be there? If I do a live trading group on the first day of trading day, which would be what? Friday the 1st? I don't think it's open Friday the 1st. So that would have to be Sunday the 3rd, I guess, is the real open. Are you going to be there? Hey, good morning, Stevie. Huh? That's it, right? So what's your plan? How do you think about it? Are you thinking about it? And now, with all that being said, let's just bust through the text and see what's going on. There's a couple more trading days at the end of the year, so probably the 27th, 28th, 29th. Those would be decent trading days. 28th, 29th, 30th, 31st. Yeah, so we'll have some pretty good trading next year. Yeah, I'm pretty sure the 1st it's closed. So Monday through Thursday next week should be pretty busy. So I'll be here if you'll be here. If you guys want to take the rest of next week off or all of next week off, I can do that. If you want me to do the webinars in the morning, I'll do that for you. You let me know. Let me know in the comments below if you're going to be here all next week and if I should do a webinar with you. Don't put it in the chat. In the recording of today's video, let me know. And if there's like at least 100 people that'll show up, then I will commit my time. If not, right? Anyways. So, turns out this is indicative of if you're a bull or a bear. You hear it from me every day, I know. Okay? Please let me know, right? You need to know. You hear it every day, but it tells you where the right prices to buy and sell are. So we're in this period here, and you might ask me, Wayne, is this going up or is this going down? And you know what my response is? How the hell would I know? So on a swing basis, you're late here, right? Swing bullish basis, you're late on the bottom. On a swing basis on the top, you're late here, right? Like this is an entry here, this is an entry here. And bears think it's coming down and bulls think it's going up. So what do you want to do in the middle? I don't know. Okay. I would say if you're a day trader, you're probably going to focus, in particular, a day trader pays a lot of attention to time of day. Do you guys remember a month and a half ago, I taught you how to trade oil? And I said time of day is super important. So I look at this time of day and I'm probably like, yeah, it'll probably go up for the next 2 or 3 hours and then I'd be done. Just a pissy little scalp. Okay. Okay. In that case, you probably bought it at 47.50 and you're already done. Okay. You're already done. Congratulations. Good trading day, everybody. Yeah. You're already done for today. Great. La-di-da. Nat gas, we'll skip. Brenty, we can do Brenty. A little bit different of a setup, but same challenge. There's the on high. Here's sort of the day trade. And then here's the real low. And you're like, well, this really depends on your conviction. If you were a trader down here, okay, this sets up your next move. You expected the higher high, you expect the higher low, and now you're going to get the higher low. There's probably going to be a challenge up in here, and then we'll probably lose out of volume, and that would be that. So if you were a day trader on Brenty, you'd probably buy it here at 50.5 and take it up to 52 and be done. $2 is a lot of money. You might even, right? 50.5, even a $1.50, even getting it here on a half trading day is pretty reasonable, I think. Okay. I got ghee on my face. All right. And but other than that, this is the zone of mediocrity. The zone of mediocrity. Oh, I know what you can write in yesterday's video in the description. The laws of reciprocity. All right. Gold we did. XRP. Is anyone going to buy it at 25? I just think of people that react. They're like, fudgesicle, look at this. It jumped from 25 to 70. Sorry, to 90. It dropped to 25 to 90. Buy, 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 money. Goodbye, money. Goodbye, net worth. Goodbye. Right? What happened to the extreme boss mode, right? Do you remember we talked about the value trap? Never buy anything because it's cheap. Well, same thing. Never buy something because it jumped 300%. Well, it's even more than that, huh? 400%. And we're right back to where we were. Gee whiz. Gee whiz. Okay. Gee whiz, huh? Easy come, easy go. The worst part is like, if this made you a billionaire, I mean, the best part of it is you can say, I was a billionaire for 3 weeks. What was it like? Well, nothing changed because I never cashed out. I was going for 2 billion. 1 billion wasn't good enough. I was certain it'd be worth 10 billion. So I never cashed out. I never bought a car, never bought a house, right? Never got a jet. Oh, what happened to Jet Boy? So Jet Boy, his ads aren't running anymore, and the government shut his business down, huh? The world's largest real money options trader sitting on a jet in a T-shirt he bought from Target. He's gone, huh? They're all gone? You don't remember Jet Boy? I'm the world's largest real money options trader, and I'm sitting in my jet with my Target T-shirt, right? You don't remember this guy? I used to get his ads like 500 times a day. No? It's pretty funny. All right. Raging bullshit. Well, I actually feel bad for them because I can't imagine they were doing something straight up fraud. I mean, if they were, I mean, then they're dumb. But in my experience, or at least in my thought process or whatever, I think there's a huge probability that they didn't do anything criminal, but they overpromised and put themselves out there vulnerable in a market that's ridiculously sensitive to that. And they get taken down as a witch hunt. And it's part of the business, man. It's part of the business. Okay. Yeah, so this is me giving you the, right, you know what all this is about. There's the in, there's the out. What's the rest? Hope. Now, if the yens drop by, if gold drops by $100, is it possible this can drop by $500 or $1,000 or $5,000? If gold drops by 100, could this drop by 1,000? Well, it could drop easily by 1,000, right? See, this is the interesting thing. Wealth managers will say, I will give you diversification. Diversification. Okay. Right? That's what a wealth manager does. By the way, can you get filthy stinking rich by having a diversified portfolio? No. Because that reduces risk by, right? So if you reduce risk, you're reducing the reward. So you're just slowing everything down. So diversification won't make you rich, but you're trying to invest for 30 years. But of course, to them, that means even if the stock market drops 30%, they're not going to do anything for you because they're going to say, well, you're diversified and on the long run it'll work out, which has been proven true. But the thing is, why do you pay them 1% of your net worth to do nothing? And then their form of diversification is to buy the stock market index, which you could buy for 0.00825, but you're paying somebody 1% to do it. So you're like, holy crap, you're paying too much. Or they buy you a bunch of mutual funds and ETFs, which, of course, you could go to the same company, like Vanguard, that sells you the S&P 500 index, and you pay almost nothing. It's almost free. And then you can go and get a mutual fund that provides different levels of diversification. You can just pick the top 2 or 3. You're done. Okay? So what about, right? So now you don't even need a wealth manager, but let's say you can't do that. Right? So they're going to give you diversification. So what are they going to buy? Different sectors of the stock market, maybe different if they're smart. And by the way, most of them are not smart enough to buy like, oh, we'll get you in the German stock market as well as the Chinese stock market. They can't think that. What do you mean the German stock market? The DAX? We can't do that. But anyways, so they give you all this diversification, right? And they give you some crypto, they give you some gold, they give you some stocks, they give you some bonds, they give you a bunch of things, international stocks. But all of course they're doing is buying some international mutual fund, right? Or some derivative that mimics the Chinese stock market. And you buy all this stuff, okay? So now you're diversified and you paid way too much for it. And now what? A macro happens, macroeconomics. Okay, so let's say there is a big drop, right? Guess what happens? If there's, right, a big drop, dollar gets strong, yen gets strong, okay? Stocks fall. Bonds don't rise because the Fed is manipulated in that, right? So stocks fall. this rises, right? What else? Bitcoin falls, oil falls, so energy stocks, all that kind of stuff falls. Yeah, and then you see, all of a sudden the macro trumps everything else. And right now, no matter what you bought, your diversified portfolio drops. All at the same time, all for the same reason. So are you really diversified? So I think, right? I think if there's a sell-off in stocks, there's going to be a sell-off in Bitcoin, there's going to be a sell-off in oil, there's going to be a sell-off in gold, and, right? They're all connected, guys. And I describe this as Newtonian physics. Okay. So if you're a hedge fund manager, it's proven that a specialist will beat a generalist every single time. So you need to be a specialist and say, all you do is Bitcoin and you watch macroeconomic influences on Bitcoin. You're not just one of these idiots that just trades Bitcoin because it's Bitcoin. You're like, No, you're using macroeconomics the same way an oil trader would trade, or the same way a gold trader would trade, or the same way a dollar trader would trade. Okay? And you have hyper-focused and specialization. Okay? So, for example, if all that happened, this goes up, this goes up. Where's the complication? This goes up. There's no complication if you understand what's going on. Actually, Euro might weaken. This one might just be flat. See? This one would go up, this one would be flat. This one would go up. Why? The same thing. Same thing. For the same reason. Okay? All right, so let's go through a couple of these. Right? A little late in the game, don't you stink? Look how many times we have this marked up. Okay? So you have to decide. Next week's a good trading week. There's days left next week. So, WWWD, what would you do? I know that's not WWD, but anyways. Wolfgang says, let's buy all. Now, I think you're joking, but let me make a comment. To do something now is a gamble. You don't know shit what's going to happen in 2 weeks. So what I'm preaching is not buy dollar, buy yen, sell Bitcoin, sell the stock market. Never said that. In fact, on the long run, all those things are going to do the opposite of what was just said. I'm very, very, very bearish on the dollar. Doesn't mean I can't think it's going to be bullish in January, at least for a couple of weeks. But it might be bullish for a couple of months. Doesn't change my bias. It just sets up my trades. Because if I'm a bear on US dollar and it gets strong for 2 weeks, 2 months, that's awesome. Because then I'm going to sell it. I'm going to sell the strength. So I want you, instead of thinking, Wayne said this, so I should buy it now. Whoa. You're not, right? That's not the message I'm trying to give you. I think if that is a reasonable plausibility based on your analysis, then what would you do if it were true, if you use technical analysis to confirm that it is happening? And the second thing is, what would actually put you into the trade? When will you know? See, most people don't even think about it. So they just watch it happen. And then, of course, they enter way, way, way too late. 3 hours later, they buy at the top. You're like, dude, I thought you said it was coming. Right? So don't front run it. Use technical analysis, because a lot of people will front run for to cover up piss poor analysis. It's true. So at what price do you expect things to happen? And how will you know, like visually, what will you see technically? What will you look for to say, aha, buy? Versus just reacting. Look, XRP's up 400%. I guess I should buy now. I used to be a billionaire once. It was a tough week. Toughest week of my life. Spare change? Any spare change? So my point is you really should think about it. In my book, I talk about your mind's eye. So if you think about it now, and even better, write it down on a piece of paper. Your favorite reversal patterns, for example. And focus on that and say, between the 29th and the 5th, imagine that. You see your favorite reversal pattern. What do you do? Even better, you say, okay, I like Wayne's theory. It's good to have a plan, right? Trust, but verify. Go back through the last 200 years of euro dollar trading or pound dollar trading and see what happens around New Year's Eve. And you're like, well, 72% of the time over the last 200 years around New Year's Eve, you get some dollar strength. Is that true? I don't know. Of course, you're not going to get 200 years, but how about the last 10 years? Dude, how long would that take you? 20 minutes? You see what I mean? Do it. Own it. Deserve it. One of the most important things that you may benefit from my training, which you might not know for a very long time, but you'll probably be most appreciative, is when you do become successful, you will be able to sleep at night because in the back of your mind or in your heart, you deserve the success that you got. Now, it sounds silly, but many people, in particular in trading, that find success will then self-sabotage because they still don't quite believe it. It came too quick. It came too early. They feel like they got lucky. Maybe they gambled to get it, but they can't sleep at night. And then we have this mechanism where you're like, this is so stressful. I can't sleep at night. Then for some reason in your psychology, you'll self-sabotage and ruin your success. The only way your success can be sustainable is if you truly believed you earned it. And how did you earn it? You did the work that no one else was willing to, 95% of people were unwilling or incapable of doing. So if I say to you, very often, but not always, you get dollar strength early in the year. And you're like, okay, that's cool. I trust what he's saying to me. Now I need to verify that. So you go all the way back and you're like, I got it. I know what to look for. Now you're boss mode. Okay? And for those that do that kind of reaction versus just listening every day, and they take that forward, now you have a real skill, right? And you'll have that boss mode. Right? And you get that yellow Lamborghini. And what's your license plate? No FOMO. No fear of missing out. Why? Because you're a planner. You're a hardcore, ridiculous planner. Yeah. What do you mean missing out? Missing out are for those that are ill-prepared. That's it. That's a pretty good one too, Alton. I like that. Oh, faux show. Yeah, I mean, honestly. So if you do that kind of stuff, if you take my advice, then the biggest gift I could give you is not technical and fundamental analysis, is that when you find your success, you will not self-sabotage because you believe yourself. Okay? Our belief system is critically important to what we do. Okay. Look, there's no solution to Brexit. Oh my God, there's a solution to Brexit. Oh no, fisheries. Oh, fisheries. Okay. Oops. So good luck with that. Good luck. What do we know though? Check this out. You ready? This is an exact buy. First, this is an out and this is an in. Okay? And based on this knowledge, this is the target. But what I was preaching here is based on the low, the high, the 50%. Okay? Check this out. It was actually off of this. Gets you to here. Okay? Am I getting a, let's see, Google speed test. YouTube is giving errors again. Yeah, see, there's no way. Google's giving me streaming errors. They've had a lot of errors lately. 30 is not great for upload, but it's enough for YouTube. 35 should be fine. This is Wi-Fi, by the way. I'm not hardwired. 600 megabits per second Wi-Fi.
Incoming mail.
Yeah, 38 or 39 upload while I'm streaming. So I don't know why YouTube's giving me all these problems. All right. Should be fine, YouTube. Do you look at the wick or the body? Both. See, to me, it's the wick and the body are important because they tell you different things, but the most important thing is the price. So I try to anticipate the wick before the wicks happen. Now, Marina asked a great question a couple of weeks ago, and I can't remember what it was, but we had talked about that. And very often, like for example, the swing traders, the swing, for those that have done the swing trading course and the day trading course, we talk about trading inside the wicks, right? It's a technique. Okay. And did you tell a second time why, yeah, pound is called cable. There was a cable between the London Stock Exchange and the New York Stock Exchange that went underneath the Atlantic Ocean. They were connected by a cable so that you can get the ticker tape. Yes, but from what that was, and so I try to, it's about anticipating the wicks before the wicks have happened. So you have to understand, like, for example, this was people taking profit. So they took profit to create the wick. So, and this is a messy chart now, so let's just clean this up. So with that being said, they had a plan to get out for whatever reason. So let's just put this maybe template monthly pivot points or something. All right, people had a plan to get out, right? So they got out, And therefore, if they had to plan to get out, then they thought about it ahead of time. So the reason and the price should be predictable. Okay? For example, this should be predictable. This should be predictable. We know this is where a bull would buy. This is where a bull would exit. And we know there's no bears because this is a BS. That's not where bears sell. Okay? That's not where bears sell. So this is just BS. Okay? And this target says you might be able to get to here. Okay? But look how important these are. Obviously, right? Wouldn't you agree that obviously somebody said this price was important? Well, we also know why it's important. It's 131.90, not 132, by the way. Okay. So these are predictable. So if you have plans, your planning creates the wicks. Okay. And to look at it differently, for example, maybe we'll just get rid of. Okay. These are the opportunities, right? You're inside these wicks. Okay. So, for example, let's take a closer look. Okay. Do you remember why this was important? This is now a daily. Do you remember? Do you remember why? That's the central pivot point. It created the bottom of the weekly. Okay. It created a great day trading opportunity, even on an hourly chart. Right? Look how nice it behaved. And it was all predictable. But this is the weekly wick. You see? On a weekly basis, this was the wick. So for us, the weekly trade, right? The trader that's using weekly candles doesn't see this move, nor do they catch the pullback, which is very obviously a Fibonacci retracement. And they're not in it, right? But you should either be in here, plan B, or here, plan A, both of which a bull would catch. And that's what I preach, where if you don't know you're a bull on this, then you're not going to catch that because you're sitting around making decisions all the time. You would have tried to sell a break low, then you would have tried to buy on a high, and then you would have tried to sell a low, and you're just all over the place. So typically, depending on your time framing, you're buying someone else's wick. So for example, let's look at a very obvious. So let me take you through the psychology here. You're sitting here going, this is a central pivot, this is a central pivot, this is a central pivot. As a bull, I think bulls are going to buy here, bulls are going to buy here, bulls are going to buy here. At what point do you recognize that bulls have bought? Okay? But here's the cool thing. Even if you didn't buy this move, check this out. You ready? You're thinking ahead, bulls are going to buy here, bulls are going to buy here, bulls are going to buy here. Then you say, oh, I guess bulls bought here, so I'm going to buy the retracement. So you buy the 618 Fibonacci retracement, and what does it predict? The 1382. Shut the back door. Look at that. Drop the mic, walk off stage. Someone else didn't even see that. They're like, oh, look at the wick. Which one's important, the wick or the real body? This formed your real body. This formed the wick. Which one's most important? Yeah. They're both important. If you didn't think it would go up here, you don't have a plan, you don't have a bias, and you're not trading properly. Only a bull would recognize this. Now, someone else might say, well, Wayne, how did you know it? No, I don't. No. Don't think the answer lies on this chart. The chart is not the boss. You're the boss. How did you know? Well, I don't know. I just stare at this and hope for the best. No, that's not how you do it. If you were a bull, you're sitting here thinking, as it's falling, bulls are going to buy, bulls are going to buy, bulls are going to buy. So you could buy that on a 15-minute chart. On a 5-minute chart, you could be long somewhere in here. Now, you have to be finger on the trigger hardcore. You don't have to trade that way, but you absolutely, certainly could. Because you knew days in advance you wanted to buy it around 132. And your actual price is 131.90. Oh! It's perfect. But that's Johnny on the spot perfect. What about, like, can we be perfect all the time? Heck no. Life is challenging, guys. Can't always be there RWA. You need to try, but it doesn't always happen. But are you allowed to miss the 618 Fibonacci retracement after you confirm bulls bought? No. You forget this one, you're fired. You're a bull in this, you missed that one, you're fired. You're fired. You're not doing your job. You're weak. And the weak get called. Right? Not a call option, a call option. Right? The sick and the weak. If you miss it because you're sick, or if you miss it because you're a weak trader, you're a bull on pound dollar, you're an expert. You're my representative. You're my portfolio manager that buys pound dollar, and you miss this one and you miss this one. Then what is it that you do for me? Besides chewing on your fingernails all day. Right? That is your job. Think of it that way. Now, you might be looking at 19 different currency pairs. That's your problem. You're spread too thin. You're an expert of nothing. So think of it this way, guys. If you are a portfolio manager responsible to the team, to the fund, for being a bull on pound dollar, are you allowed to miss this? Keep in mind, someone else is a bear. Someone else is a bull pound Aussie. You're just the pound dollar person. Are you allowed to miss these? Absolutely not. You can't do that, you're fired. Okay? Check that out, bro. On Christmas Eve, you're slamming into the 1382. Okay? Well, you know, okay, it's only 500 pips. Maybe you shouldn't take profit. 500 pips from the bottom, 133 to 136, 300 pips off the second chance. Okay, that's an 800 pip week on 2 trades. Okay, look at that. Come on. Right? Look at that. Come on. You're the bull on this. You see, like, there's no other real trades to even be doing. Right? Yeah, rookie. News and fundamentals are 2 different things. Okay? You might recall way back, I guess it was earlier in the, it has to do with the worst is over. We're trading 6 months in advance, rookie trader. We're not trading about now. Now, the volatility, the vol, which I tell you, right, the volatility is headline news, but it's not fundamentals. News is not fundamentals. Okay? So, you get kicked out on the vol, but as far as, as far as like this period here, back in May, the worst is over. So 6 months from then, things will be better. 6 months from now, things will be better. Okay? Peter says, what happens after the 1618 or the 1382? New trade plan. Typically a new higher low and a new higher high. Because remember, Fibonacci is only a trend-based tool. So if you bought a Fibonacci retracement, you expect a Fibonacci extension. If you get the Fibonacci extension, then you expect a Fibonacci retracement, which then means you expect a Fibonacci extension. And once you get the Fibonacci extension, you expect the Fibonacci retracement, so on and so forth. Okay? You got that, Petey? So going back to Rookie Trader, this is why I asked you, I mean, how many times did I ask you guys from this period to this period to this period, before summer, during summer, to create a 6 and 12-month plan? I said, if you guys were serious, you bust out a PowerPoint presentation and you would actually develop it. Not for me, for yourself. And you predict the next 6 months, fundamentally and technically. So here's a great opportunity for you guys. You should bust out a PowerPoint presentation for yourself, actually create it, and give technical and fundamental reasons for 2021. See, if you don't think about it, if you don't have a plan, you don't know where you're going and you don't know why. Be stuck in amateur mode. Remember, this is the value. If you're able to reasonably predict the future, you'll get paid. You will have value because you can do something other people can't. That's it. Okay? And you're like, that's impossible. I have a 5-year plan and I also have a 300-year plan, by the way. Okay? But yeah, if you can't do that, if it's impossible, you don't have value. You'll stay small. You'll be all income, no wealth. That's fine. You'll enjoy it, though. It'll be fine. Don't worry about it. I'm not knocking you down. But this should be an exercise you try. It doesn't even matter that you're right. What matters is you've done it. So, I'll give you an example. Somebody comes up to you and says, if you can predict the S&P 500 in 2021 reasonably accurately, then in 2022, I'll give you $1 million to invest. Okay, go do it. You're like, no, I can't do that. Oh, well, too bad. Missed the opportunity. You got to lose yourself in the music the moment you own it. You better never let it go. You only got one shot. Do not miss your chance to glow, because opportunity comes in once in a lifetime. Yo! Yeah, you just had it, man. You were in the spotlight for 4 seconds and you said, I said, what? Try, practice. How can you create value? What's going to happen in 2021? Give a reasonable answer with reasonable reason. What thought did you put in? Why did the S&P 500 go up or down in 2021? Why did gold or Bitcoin or pound or dollar or yen go up or down? What were the forces? What's your reasoning? Why do you think that? Most people say things like, Bitcoin's going to go to $200,000. Why? I read it in a blog. Okay? So it's a challenge. Do you think about these things? I definitely, beyond a shadow of a doubt, think about it, and I think about it a lot, and I think about it throughout the year. Oh, Wolfgang says proven money sits in midterm, long-term trades. Okay, yeah. But Forex in particular offers a lot of opportunity for small, short-term trades. For sure. So I don't knock that down. But I want you to know how to do those trades. So I'm all for it. I'm not here to belittle one person's trading strategy and favor mine. That's not what I'm here for. I think everybody here should become an expert in short, medium, and long-term trades. Scalping, intraday trading, like session opens, right? Day trading, swing trading, position trading, carry trading. You have to know all of that. Okay? And then specialize in something fundamentally. But if all you do is take, let's say, higher risk trades for smaller rewards, I don't think you'll be a complete trader at best. And at worst, you go bankrupt because the math doesn't work. Right? Because the problem is, for those types of trades, not everybody, of course, like the successful people that are mostly shorter term time frames, the successful ones know it comes down to consistency and risk reward and all that kind of stuff to a degree, meaning they don't over leverage. What happens to most, though, not the successful ones, the non-successful ones, they realize they're only making $100 a day. So because they're only making 30 to 40 to 50 to 100 pips or something. So then they jack up the lot size so they can make real money. And then that's where it goes wrong. Okay. Anyways. Let's do some yens. Okay. Okay. This is the end. Okay. Now, I want to give you an example. Do you guys remember doing this basically a month ago? I know you do, but I need you to say it or confirm it because it's important to your own psyche. Do you guys remember doing this? Okay, cool. So what does this prove? This proves the role reversal. Bulls would buy here, bears would sell here. Okay? Now the role reversals says this. I don't remember how to copy and paste this sucker. I don't remember how to do it. Does anybody remember how to do it? Anyways, it's this now. Okay? And the other part is I would pull this forward. Okay? I'd look at it this way. This is not something I do very often. Anyways. Okay. Cool. Look at this one. Luftliturgium. This one has a bigger dip on it. right? We did this one already. So is there going to be a Brexit deal today or tomorrow? Can't be tomorrow. This comes down to if you believe that's a breakout or not. Right? It's just your planning. It's not a perfect price here. You could always wait it out. Okay, it shows mediocrity. Do some dollars. Okay. Amazing coincidence of weekly pivots and monthly pivots, huh? It's amazing that some people don't use these tools yet. Look at this. Just crazy. So now we're topped off here with lack of volume and volatility. Okay. See, here's how I look at all of this. This is in. This is out. What's everyone else doing? Couldn't care less. All right. I was out on Friday. Right? Out right here. So what's going to happen next? I don't know. Are you guys excited about the macroeconomics course, or did I pick the wrong subject? So in January, I'm going to record macroeconomics course. You guys excited about that? So everyone in FX Bootcamp will get access to it, but only in my live group will they get it in January. So I'll make it available like in March or something. Symmetrical candle and all that kind of stuff. So theta, I'm not saying you're right or wrong. Okay? First of all, go back to the lesson where I trapped pound dollar that way and showed you how to trade it. But here's the thing. All I see is out. And at what time do you see triangles like this? When do you see things like this? When nobody's trading. So who cares? It doesn't exist. It doesn't put me into a trade. I'm not even in the trade anymore. So what's important to a trader? See, I don't care that it's a triangle. Literally, I don't care. It's not, to me, it's a side effect. Okay? What matters to me is that. That's the only thing that matters. I'm done. And we did talk about it on the first day of the month. Okay? 122.50. 122.50. How many people can confirm that? I know you already know, but it's important to the psyche. How many people knew on December 1st your best hope you could possibly plan for would be 122.50? The rest, if you can't plan for it, it's irrelevant. If you can't plan for it, it's not a strategy. It's a hope. It's a Hail Mary. It's a bet. Or you just have no clue. Okay? Cool. How many people recall that it would happen, the best we could hope for would be the 19th? Based on years past. That this was a time-based trade and it's sort of the last hurrah, right? Now, if you don't recall the 19th, let me give you something more specific because it won't be the 19th next year. And I don't think it was the 19th this year. From 3 years ago or something, it was the 19th. Let me be more specific. The best you could plan for is the Friday after the Fed meeting, after the December Fed meeting. How many people can say that that is factual? That I'll say that next year in 2021, I'll say it's the Friday after the December Fed meeting. Or 5 years from now, I'll say it's the Friday after the December Fed meeting. 28 years from now, when I'm 60, I will say it's the Friday after the December Fed meeting. When was the Fed meeting? When's the Friday after the Fed meeting? Now think of that. Yeah, sorry, it was the 18th. But it's the Friday after. But 3 years ago, it was the 19th. And that day, and I showed it to you a couple of times, so I don't need to go, but I did it recorded at FX Street. I'm in the Caribbean island, meeting with the central bank, right? Go ECCB. I was at the ECCB. They're like, wow, you've been to the ECB? I've been to the ECCB. What? So imagine that year where I did it for FX Street was the peak of the entire year. And so now this year, we can talk about it months in advance. Months and months and months and months in advance. And holy schnickerschnocker, that might be the top of the year. So, am I brilliant? No. Am I experienced? Yes. So I'm trying to pull you forward. I'm trying to give you 20 years of experience as quickly as possible. Can I get a thumbs up for that? Less than half of you have clicked like today. So that means 2/3 of you think this video sucks. Well, I apologize. I'm sorry for wasting your time. Maybe next year will be better than the last. I'll do my best to improve, which is actually true. This year will be better than the last. Okay? So I just gave you something worth what? How much would you say that's worth? That knowledge that you can plan the top of the market 5 years from now. Is that 10,000? Is that 100,000? Is it $500? What's that worth? Knowing how to plan that far in advance and be able to reasonably predict the top. Oh, Maida, that is so nice. Thank you, Maida. No, thank you for being in my life, Maida. I appreciate you and your contribution to the community. I'll buy a nice bottle of wine and I'll save it for 10 years. And then I will pop the cork and I'll toast to you, Maida. Oh, and by the way, Maida, have you seen Fast and Furious 8. I don't know if you're familiar with the series. There's some cars, and then there's usually girls in miniskirts. Anyways, it starts, so I'm watching with my son in the theater last night, and it's The Fate of the Furious. I think it's the last one. And it starts out in Cuba, and it's Cuban girls walking around in miniskirts and high heels. And he's like, I'm like, Cuba! Let's go to Cuba! He's just like, I'm like, yeah, Cuban girls. Cuban girls. It was just really funny. I'm like, yeah, well, it looks warm and tropical. It looks like a nice place to visit. Yeah, it's definitely a young man's movie. It's about fast cars and girls in miniskirts. I think that's pretty about it. But let's say Cuban women are beautiful. His jaw dropped. Yeah, it just dropped. I'm like, oh, they're so poor in Cuba, the girls can't afford to wear clothes. Yeah, no reason to watch it. But yeah, like, it's terrible. See, they can only afford half an outfit. At least it's designer, right? Poor girls. So it was just really funny. Yeah. So Cuban women are beautiful. That's a fact. So anyways, thank you for everything. Yeah, thank you, Morena, too. She says, I think we're all focused on what you're saying. Yeah. So I do hope to improve for 2021. I might redesign the way I do these webinars, and I always have that intent, but I just get lost in the conversation. But I think I like the conversation. So I don't know if I want to be more newsy, like, well, at 8.12 we'll do euro dollar, and 8.19 we'll do pound dollar. But next year, yeah, well, I think my wife would be very upset about that. Oh, honey, I got a surprise. Here's my Cuban baby. That'd be very surprising. All right, so let's just keep moving here. We'll go through, like, everything's been said is how I feel about it, because we've planned everything to the T, and we're kind of out of everything, and it's too early to really do too much. So in today's swing trading group, we'll try to focus on January as much as we can and try to plan out scenarios, but it's a little bit dangerous. Like, I'm doing today's swing trading group mostly to show you that I'm committed, and I don't want to not do, I want to not do it. Does that mean I'm working on my double negatives, and I don't do a very good job because I don't think that I want to show to you that I'm committed. So I want to not do it, but it's a little dangerous because it's a bit early. I think next Thursday will be really an amazing meeting. So this one we'll try to just sort of, I don't know, we can't really bring milk and cookies, but we'll do our thing today. But I think next Thursday is going to be a really killer, amazing day. Thank you, Jim. Right? But I hope you see that it's a little dangerous, but worthy of doing, even if we get together and just be together. It's useful. Okay, so what do I want to say here? I mean, we've all said it. Noki should be the inverse to Brent. We already did Brent, so you should know that. Kitty Cad, like, it's just all late, right? So here's how I look at this. If you're trading it off next week, but you're ignoring Christmas and the close today, and I don't know if I want to do that. I don't know, right? I don't know if I want to do that. But let's look at last week's trade plan, right? You see this? On Friday afternoon, you could have front run the week. And it hasn't produced anything yet. So like now that we're down here, it's a dangerous trade. Do you see like the aggression should be early, not late? I'd rather you do a Friday front run than a Thursday. Well, wait, is today Thursday or Friday? Thursday. Oh, wait. You might be able to front run, but with... Yeah, okay, wait. No, I still don't like it. And I'll tell you why. Because don't ever fit yourself into a model, I guess is how I feel about this. What do we know? Okay, we do this a lot in the swing trading group. What do we know? Okay, it's not what you think. It's what you know. What do we know? The point isn't Friday front running. The point is trading a trend and getting a retracement. So being flat is not a front run. Okay? So your aggression should be you sold here a week ago. And you're just going to leave it open to the downside. Maybe you jam your stop. You see what I mean? Like you're not trading now because there's no pullback. This is key. You trade lower highs. Not testing a bottom. Okay? And you're like, well, it's a Friday front run. You don't understand. You screwed it up. It's a bad trade. So anyways, there's that. And it'll probably make money, but my point is you should have been short, a week ago. Almost a week ago. Did I explain that? Well, I want you to really get that concept. So please confirm you got that. It's not that the Friday front runs are not important. We're selling lower highs. That's what's important. Okay? Friday front run. That's not, right? This is a Friday front run right here. It's not the important part. The important part is buying the dip. Okay? The important part is buying the dip. This is the candle. Remember? We're talking about that? The candles. You're selling this candle. Okay? It's this, the up is the important, not the down. Because your analysis is predicting this. Your analysis is predicting this. So this is just your last week's trade warming up. You should be a bit disappointed in this trade, not just getting on the clue train. Slow as molasses on a cold St. Lucian morning. Geese like double bottom next week? Yeah, plausible, right? We don't know. I think next week is going to be very interesting. So I'm looking forward to today's swing trading group, but I'm looking forward more, I think, to next week's swing trading group. Because it's right at year end, and it'll be very interesting, very sensitive to how it sets up. I think we'll have to talk it out as far as how do we want to act in that situation? And of course, how we want to act will be determined by what we see and at what price. Okay? And we still got the Brexit. We still got the stimulus, right? There's a lot that can happen next week. And the question will be, how important is the news versus the fundamentals? And what price does that put us? And of course, what vol does it create? Will there be a dip or will there be a false rally? Because, this is why I say don't get attached to the idea that, let's say, I don't want to make it confusing. So let me change this to euro dollar. Okay. All right. So I've been preparing you to say, don't be shocked if you see something like this at the beginning of the year. Okay? But it doesn't have to happen. I have seen markets that have done this. And then it hits March or February or March. And then it comes down. And you're like, but I sold everything I own right here, Wayne, because you told me it was going down. And I said, no. Stop being an amateur, start being a boss. Create value, not degenerate gambling. Much different message. So I've seen years where it pulls back, but not until 8 to 12 weeks in. And then other years, I've seen it in the first few hours straight down like a just end of the world avalanche. So sometimes it's a slow moving tsunami you don't even see coming. And sometimes it's an avalanche. It hits you and you can't even get out of the way. So it's more like be ready, willing, and able to do your job and do it well because of your forethought, your planning, your analysis, your strategy. If, then. Do you have 2, 3, 4 scenarios of if-then strategies? Okay. Shorted on price action with no other info. Well, okay. So you said, what do I know about the statement here that Zizzy said? You're short and price action. Okay, so I don't know, your form of price action might be different than mine. So if you're using price action, then you have identified resistance. Okay, so you got that. And the second thing, I don't know how you do price action, but I know how I do price action. So I'm at resistance and I've identified a reversal. I'm not predicting a reversal. That's not price action. Price action is predicting the resistance and then observing the reversal. So then you short it. I can do that all day, every day. You just, right? You're trading price action, but not fundamentals, not seasonality. You're simply using price action to predict the resistance first, observing the reversal at resistance, and then shorting. Sure, you can do that all day, every day. So I don't know you or your trading capabilities and all that kind of stuff. Very often, if you have no other information except price action, most likely you don't even know this that well. I mean, what do you mean you have no other information? Really? Like, really? Why? I'd question that. Like, what do you mean no other information except price action? So very often, if you don't have any other information, your price action is potentially extremely weak as well. And so you're like, I'm going to short this market even though nobody's trading the market. Like, for example, we know that, right, Zizzy? The market closes in a few hours. No hedge fund manager is going to drop $1 billion on this. No mutual fund manager is going to throw in a huge position into the stock market. Like, it's not going to happen today. Maybe we get some last moves next week and stuff, especially if we get headline Brexit, headline American stimulus. Okay, cool. But today, someone's like, you know what? I'm going to wait for Christmas and then I'm going to drop $1 billion on the market and freak everybody out. It's going to be so great. That's what you're doing? Where you're like, well, I don't know anything else but price action. So you don't even know that? Like, really? The market's going to close in a couple of hours? Like, literally close. And not be open tomorrow. Banks around the world are closed tomorrow. Even Muslim banks. They're not even Christian. They're like, what's Christmas? Doesn't matter. Volume and volatility is over. And you're like, I don't know that. Well, you should know that. And so with that known, do you know that you're at resistance? So I don't know if you're saying short this, but where's your resistance? Well, the projected top. Okay, that's fine. But you're also shorting in something that is technically currently on a daily chart bullish. So that's a bit of a gamble on hours before the market closes, which means no one's going to enter new trades. But what you're doing, and again, once I assume you know this if you're planning, you're trading on potential profit taking. You are stop hunting. So I would say your form of price action, if you've done everything I already explained, used your price action to predict resistance, which is easy. I talked about it for 4 weeks ago. And then on top of that, you observed a reversal pattern. Okay, so you shorted this rally back up. Okay, cool. So your price action is good. But this form of trading, this strategy is called stop hunting. It's a form of counter trend trading that happens with an event. It's an event-driven strategy. The event here is the close of the market. So sometimes it's a Friday stop hunting, and I've taught people how to do that, right? It's a Friday close stop hunting trade. In this case, it's a holiday close. Okay? Good. No. Well, I'm hitting you hard, Zizzy, because I'm trying to give you education, right? I'm trying to share as much as I can in a really tight amount of time, okay? So what you're doing is you're hunting stops because your analysis tells you that you expect massive profit taking going into the holiday, people taking money off the table, risk off because of the close of the market. So therefore, you're selling as they exit their long trades. The broker will enter the short trade to offset their open long position, which then removes the floor and price drops, but you're selling, so you're pushing a falling floor. It's like jumping in a falling elevator. Okay? Cool. If you get this right today, your real big challenge or thought would be, do you hold short till the end of January or the end of December? But maybe to the end of January. Because if you're taking all that risk, what kind of reward are you going to accept? 20 pips, 200, 2,000? So I'd like you to think about that as well, okay? So anyways, I don't take anything easy, and I hope it helped Zizzy. Okay? I have a very short amount of time with you, so I got to hit you hard. I got to fire for effect. Okay? But if you're learning to place trades, the first thing you must understand, if you decided to sell in an uptrend, and that's never a good idea. Okay? So counter trend trading with an event-driven strategy is the highest risk trade you could possibly. You are betting the entire bullish market is about to collapse. Now, in this case, you might even be right, but I don't like the betting part. Okay? Yes, yes. These are, mathematically predicted. Okay? This is a weighted mean. Okay? And this is a standard deviation. No, the standard deviation's here, and another one's here. So, for example, this is actually bearish mode. Oh, dang it. Hang on. Okay, this is bearish mode. Let me do it this way. Swing trading bullish. Let's zip in. Okay. Or day trading bullish. Maybe we want day trading bullish. Day trading bullish. Okay. Okay. So, I told you last week that this was the out price. 122.50. Actually, 3 weeks ago. This is my out price. Out, out, out. So I exited my my €2 trades for 500 pips each right there. So none of this other stuff exists for me. Okay? None of this exists. Isn't that amazing? So now you have to decide what you want to do. Okay? Now, so if you are thinking this out creates a down, which I think could happen, but I'm trying to wait till next week or the week after, so I don't want to be 2 weeks early. But let's look at Zizzy's idea of this is a top. Now, Zizzy's only using price action, so I have a feeling it's probably not enough price action, but let's do it this way. Position trading bullish bias. Okay? And this is my projected top right here. Okay? Cool. So now Zizzy needs to put together this kind of plan. I want to see this trend now. Okay? The thing is, based on seasonality, I think the timing is too early. Oops. I don't know. I'm trying to get it there, but that's not going to work, right? So anyways, I think it's too early. Get this off the peak here. I think that's about right. Okay, so I don't disagree with the process. I disagree with the seasonality of the timing, or the timing of the seasonality. Okay, so that's that. I get that. It's too early, I think. What else? Let's adjust now. And I'm going to say, if I had let's do it over here so you can see it. If I had a position trade as a bear, where would I be? Okay, and I go back to here. Okay. Then these are the best prices. Now Zizzy says we're at resistance. So I don't. Depends on how Zizzy identified this. If Zizzy said 22, then no, the answer's wrong. You're just throwing out a psych level. If you're saying you shorted at 22.22 or 22.11-ish, if Zizzy's short here, then okay, I see it. And if I were me, I would hold down to 119 minimum. So we're at 22. So if Zizzy doesn't pick up 300 pips, it's a failed trade. So I would have a 33 pip stop and a 333 pip limit, and I'm done. And if I get the avalanche of profit taking, then I'll go into the new year with my stop at break even, and I'll either make 333 pips or at a free shot at the net. No harm, no foul, no loss. I'll lose 3 pips or make 333. So, right? So my first step would be risk 33 pips for 333 pips profit. And then if things go well and we go into Monday and Tuesday, I hope to be at, let's delete this. I would hope to be at -333 pips. Okay, okay, ZZ? ZZ top? Oh, you shorted CAD because, okay, yeah, then forget it. Yeah. You're selling low late in the day at the close of a market. Let's take a look, though. I think we had oil going up, so it might not be a bad trade, right? Didn't we have oil going up? Let's go back to the commodities. Okay, so what time is it now? We have to put this on an hourly chart. What time is it now? Is that this candle? So I'm going to move it back a little bit here. That's probably it. Okay. So we know that's the candle. Now let me go on to a 5-minute chart, somewhere in there. 1400. Yeah. All right. And we're 16. Is it 1500? I guess we have to go to 15. 14, 25, 15. There you go. Okay. So the way I've taught you how to trade, you know this is the best time to buy, and you can't sell it. Okay? I've taught you this a million times. If you don't know that, you don't know how to day trade, and you need to be taught. Okay? That's it. If you don't get that, you don't know how to trade oil, you don't know how to trade market opens, you don't know how to trade on a daily basis, and you probably don't know how to scalp. Cool. So, according to this, we should be up here in the next couple hours. That's it. So, if that's true, there's a reasonable correlation between WTI and USD Kitty CAD, and that means there could be a very short-term downplay in your USD CAD. Okay. So now you go to USD CAD, and you're playing that out. So let's play this. Let's see, what do we know? Okay. I don't like that price action at all. And I think this is where we were. I think I was saying how I didn't like CAD, that you're a day late or a week late. So let's go back. Let's change it now. So we're bearish on this, swing trading bearish on this. Yeah, this is where we were, right? So I look at it and you're like, oh, that's not a Friday front run. Okay, so let me change template, position trading bearish. Yeah, nomads land, but again, on the January top, that's a heck of a risk, isn't it? And I don't mind the top here on the January entry, but the issue is here now. That's not a good place to sell. All right, so now let's go day trading, template day trading. So day trading bearish bias. Okay, once again, if you were up here, maybe. I think this is what we talked about. If you traded last one, there's a Friday front run, or is this daily? Yeah. Okay, so you sold it here yesterday, front running today. But this is not a retracement. So the only thing you got is a slow trade on a low vol week. I told you all the powerful hedge fund managers are with their beautiful people on their private jets. They're hanging out in the Caribbean, drinking fancy cocktails. And now it's just interns trading in here. So like, I look at this and I'm like, the only thing you're trading is kicking off the 21. And there's no retracement. So selling here is not a Friday front run. So I won't count that. And then lastly, ZZ had a said doesn't know anything about but price action. That's not very good price action. So let me try to explain this one. Let's do some price action. Okay. You're playing the double top now. Down, down, down. Oops. Let's do some price action. And I'll make this a little thinner. Down, 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 up, up, sell. Down, 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 up, up, sell. Down, 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 up, sell. Down, down, up, down, up, down. Like, what price action is easy? I don't see it. So you're on less than a 30-minute chart. Then I see, if you missed this, I'm not sure what you're doing on the smaller time frame. So you're on a 5-minute chart. So let's go to a 5-minute. So yeah. So what price action does ZZ have? So the double top off the, what is this, a 4-hour 21? Down, 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 up, sell. Okay, I see what you're doing. It's a very mediocre trade. You'll probably make money on it. It's just not a very good trade. Okay, I see what you got here, but you're selling at support. This is what this gray area is. But based on the short-term market open of WTI, you're taking something that is not trending, but instead sideways moving. So you got yourself a mediocre scalp. So I don't know if you're here or here or here, but this is selling in the face of obvious support. This is on support. So if you get this, you might be right for an hour, but you could be wrong for a month. And that's my problem with it, okay? And I would suggest, too, your price action, you need to understand that this isn't price action. This is the death. Right here, your price action died. This is death now. This is poverty. This is what poverty looks like. Okay? So I'd be careful. I don't know who taught you price action, but you might want to take my price action course. That's, but here's the thing. Here's the scariest part, though, ZZ. You probably make money on this trade. It's just probably the worst pips you could possibly make. And it'll lead to 10 other situations that'll lose money. But this one, you'll probably be right for an hour and wrong for a month. And I have a problem with that. So no offense, no harm intended, but I'm trying to be brutally honest in a very short amount of time. I get it. It's just, you should have done this last week and it would have been easy. This week, fundamentally, seasonality-wise, even your your price action, it's all bad. This is all bad in here. That's all bad. There's nothing good. Nothing good. Sorry. Yeah, sorry. No. But you'll probably make money. Making money doesn't make your trade good. Losing money doesn't make your trade bad. I want you guys to think about that. Don't define good and bad by profit and loss. That is not correct. Okay, this is a pretty high risk, low probability trade that'll work out probably in the short term. And probably have a lot to do with the WTI. Okay. Cool. So that's it. I'm spent. It's 10 a.m. That's good enough for the girls I go with. So happy holidays. Hope you have a good time with your family if you're meeting. Once again, if you're in my swing trading group, my live swing trading group, we are meeting today at 2 p.m. to kind of set up next week and all that kind of stuff. Talk a bit about next year, but I think next Thursday is going to even be better for all of that. So remember, if you're in the group, log in just before 2 p.m. I will send out an email, but it doesn't matter. Log in, and I'll see you in the Zoom room. There's still an opportunity for you to become an annual member. If you didn't get the email, wayne@fxbootcamp.com. You cannot become an annual member unless you've already signed up for the training courses, you've watched all the videos, you know how to do price action, you know how to day trade, you know how to swing, you understand fundamentals, you've done taking control, right? You've done all these things. You've done the original FX Bootcamp. You've done all these things. At that point, you're welcome to join. Okay? It's not about education per se, it's about doing. Okay? But anyway, so if you were an FX Bootcamp member 5 years ago and you want to join my live group, then you can. And if you didn't get the email because you're on the old database, then send me a new email, wayne@fxbootcamp.com. You can join, by the way, monthly is still available, right? But annual is the new one. And what else? Yeah, please visit tradersway.com, open up a trading account. Get that demo going. Remember, this is an opportunity for you to practice, to learn, to train. So over the holidays, it's a great time to go through all the videos over and over and over again. Sharpen your saw and show up ready in 2021. Okay? Okay? So, anyways, oh, and I forgot to show you my sweater. Did you see my sweater? I'm wearing my Christmas sweater. All right, I'm wearing my Christmas sweater. Yeah, Abercrombie. Yeah, very nice. So anyways, what I want to say to you is peace on earth, peace on earth, peace on earth. May the pips be with you. May our profits be above average. Happy holidays. If you're in my swing trading group, I'll see you guys in a few hours. There's no webinar tomorrow because the market's closed. So if you're not in my live trading group, then I will see you Monday, I guess. Okay? Happy holidays. Beep, beep, beep. Where do I do? Click here? No, click there. Pachow. Pachow.